Hello everyone and welcome to my morning report chart analysis videos on Tuesday the 22nd of May with me, Richard Perry, market analyst at Hantec Markets. This little dollar correction that we saw yesterday afternoon is sort of continued really into today, into the new trading session. We saw an intraday correction, quite a sharp one actually, with the dollar closing towards the low of the day, and then an early bounce has been sold into again today. I don't. I mean, the yields have been a bit of a, well, certainly yield differentials have had a part to play in this move in recent times with the dollar strength. And this is interesting. We've had a bear key one-day reversal on Friday, which sort of has drifted on a continuation lower. But it's interesting that what we have seen is the yield spread between bunds and treasuries increasing, which is sort of helping to sort of pull that move higher that we've got in the euro dollar, and that is sort of helping to sort of drive a bit of a corrective move on the dollar generally. Again, you can see that on the yield spread between treasuries and JGBs, again ticking lower, and you've seen a slight little bit of a retracement on dollar yen as well, so that these yield differentials are still playing a part in this move. Now what we've got today is the dollar weaker across the board now into the European session, and not only that, we're seeing some interesting moves whereby the Aussie dollar, for example, has broken out, and the Kiwi New Zealand dollar has also started to sort of put in a quite a decent recovery. So let's watch how these moves develop. But Aussie dollar is my chart today, and I'll talk you through that chart in a bit. But it's interesting that we are seeing that. Other interesting moves we're seeing is the fact that equity markets, FTSE 100, slightly outperforming still, but interesting that these European Eurozone equity markets, DAX and CAC, that were closed yesterday didn't have a part to play in that run higher that we saw, strong run higher on FTSE and Wall Street yesterday. Haven't really been able to get the benefits of that today, and they're actually underperforming. So perhaps that is a little bit surprising, but yeah, that's what we're seeing there. Gold is another one. Gold has, as the dollar has slightly weakened in the last sort of 24 hours, the gold price has bounced as well. So another thing to watch out for. But I'll talk you through all these charts in a bit. But certainly some interesting moves that we are seeing today. Now, we haven't got a great deal of data points today to really point towards. Richmond Fed composite at 3 o'clock, +9 expected there. And that was a surprise drop. Where is it? Surprise drop that we saw last month to -3 on the Richmond Fed. So that'll be interesting to see if that can recover back to positive. But the market will also be looking out for the inflation report hearings on the Treasury Select Committee for Bank of England's Mark Carney today. So obviously Bank of England did a, well, pretty much significant about turn in the last 4 weeks, 5 weeks. On an interest rate hike, and subsequently Carney is going to get grilled on that, I would imagine, today. So we'll see how that sort of pans out. But my chart today, I was talking about it earlier, is the Aussie dollar. Now we have seen the dollar strength over the past few weeks, but the Aussie dollar in the last couple of weeks has really started to turn the corner, and look at that, a pretty well-defined head and shoulders reversal base pattern, inverted head and shoulders, completed above 75.65 resistance yesterday on a closing breakout, and that move has actually retreated back to the neckline today and bounced. Look at the momentum indicators. RSI above 50, MACD lines having crossed higher, accelerating higher. Stochastics strongly accelerating into positive territory. This certainly looks like we're unwinding within this downtrend. That downtrend currently comes in around 77.30 area, but the base pattern of that move implies around about 150 ticks, 160 ticks, pips of recovery. That would give you 77.10, which is an old pivot as well. And again, that would be around about where that that downtrend comes in. So this is an interesting move, I think, on the Aussie dollar, and it really does suggest that the market is sort of beginning to recover. Now, above 55 or even into the 60s would be a really strong indication that the Aussie dollar is going back on a strong recovery run. Now we've got this hourly chart, which you can see here, broke out yesterday above 75.65 and then basically used that as the neckline support. So you've got a nice band of resistance, these near-term breakout levels. I'll stick the crosshair on 75.30 because it's been a bit of a pivot. But between there and 75.65, good buying area now, I think, on the Aussie dollar. And you can see that in the recovery, whereby that's a pretty decent buying area. So anything back towards that neckline is a decent opportunity, I think. But it certainly looks like a positive move. Near term, a little bit stretched on the momentum indicators, you could argue, on the hourly. So you might get a little bit of a near term drop back again. And I would say that is a pretty decent base pattern for recovery now on the Aussie dollar. So looking pretty decent, I think, for at least a test of 76.40. Which is this next resistance band, but 77.10 is around about where that trend, that recovery target comes in. So I wish you good luck in your trading today, and I'll speak to you later.